Let's see how that works. Yeah, I published one live streaming webinar last week, how to, one of my tech tips. So it looks like we are live, all right. And there's a little bit of a lag. And so let's push the go button and get this thing recorded then. Okay, good afternoon, everybody. This is Dennis Wilborn. I want to welcome you to this session of How to Make Money Trading Stocks weekly webinar, where we're reviewing and going over what is happening in the market so we can plan something moving forward. I got a couple of ideas I want to share with you really quick. I am the active trend trader, and I want to thank you for joining us today. We will keep this down to about 15 minutes. In respect of your time, I want to thank you for plugging in with us. And also I want to, I am working with and doing a simultaneously live broadcast to the YouTube channel. And so if you do join us on YouTube, I don't know if anybody is or not, just remember there's a little bit of lag time, but also you can leave messages there and you can type back and stuff. I may not see the chat, but I will go back and look at it again. If you're joining us via the regular webinar, again, use the chat table, little chat box if you want to communicate. Glad everybody's here. Let's get going. I am going to there I am. Oh, hi, wave, everybody. Hey, aloha. And I will. There we go. Take that guy out of here. Let's get down to business. The market. I've been showing this for a couple of weeks now, and I really think that it reflects what the market is all about. One thing is that, this is what we want from the market. We want something that's stable, steady, just, 1 + 1 + 1, blah, 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 adds up to 7. Unfortunately, what the market tends to deliver us is something that bounces all over the place. And that's one of the things that people who look at trying to, I want to be a trader, I want to give up my job, I want to do this, I want to do that. They need to recognize that learning to trade and learning to trade for a living is a lot like taking on a commissions job. So a commission job, what do you basically have with a commission jobs? Well, a couple of things. One, commission jobs do not get paid the same thing every week. Basically, it fluctuates. Sometimes it's big, sometimes it's small, sometimes it's not at all. Sometimes if you work for a company that has a draw system, you actually have to draw against a balance that is there for you. So you can actually go in the hole with respect to what you earn. And, so much like what can happen when you're trading the market itself. So my objective of doing the session of how to make money trading stocks is to basically provide timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions so that your wealth can be multiplied. And we just provide a couple of areas on this quick session, quick review that you can perhaps benefit from and capitalize on. The market so far, sloppy, choppy, news-driven, tweet-driven, globally driven, et cetera, et cetera, et cetera. That's basically what's going on with the market right now. And so I have to ask myself a question. After such a huge sell-off earlier in the week, we did have a margin call Monday where things just flushed down because of what transpired last week. We walked into Friday of last week with the market selling off. That triggered some margin levels on people's accounts. And when margin levels get hit, what happens? Well, the brokers send out margin calls to say, hey, you need to make this good. And so how do most people make their margin call good? Do they come in with more money to their account? No, they just sell what's in their account. Therefore, that contributes, adds fuel to the fire, and the market continued to melt down. So is there a reason to buy, or is there a reason to stay flat? If you answered yes to both of those questions, you would be correct. And so, so let's take a real quick look at what's going on in the market. So here's where we sit with the active trend trader. We're up about 19, a little bit over 19% for the year. We are slowly, well, not slowly, we're, as we say, we add a little bit week after week after week after week after week. And we, have gained on most of the indexes and have overcome them and surpassed them. The indexes themselves, as you can see, NASDAQ Composite still, carrying the load for all the indexes. The Dow, the S&P, the Russell are basically the laggers at this particular point in time. All of the indexes are down from last year's high. So let's take a look at the charts. Yeah, here I am. We've got a hill next to our house that I run down, and it's at the end of my 3-mile run that I do 4 times a week, and it's called The Beast. And when I started getting myself back in shape this year, I couldn't make it to the bottom of the Beast within my allotted time, which is about 30 minutes or so to run, 3 miles or so, and 10 minutes a mile. Hey, I'm an old guy, and so, but I finally started beating the Beast. And so I'm really pleased, and that's what we want to do. We want to beat the Beast when it comes to our trading. So let's take a look at what's going on with the indexes. I'll go to the daily chart and the weekly chart. Here it is. I've got a lot of lines drawn on this. So I want to basically let's take a look at the S&P first. If you utilize Fibonacci's have done such a wonderful job of explaining or are showing areas of really hidden levels of support, resistance, and all that type of thing that you can predict off of. What I'm looking at right now is, let me click this. Let me go back a couple of clicks here. And I'll show you what transpired is we started selling off, and this was, let's see, when we first got that signal there, it was the 29th, and then we continued to proceed down. This was the first, the first was on a Thursday, so the 20th, and so the day right here, this day, the 30th, this was the day of the Fed. The Fed came out, reduced rates. Everybody was, that's what they expected to do. They anticipated that perhaps they should have reduced rates a little bit more. They didn't. And so the next day, the market starts to rebound. And that's immediate. And that's exactly when the president comes out and tweets, oh, by the way, I'm going after additional tariffs on the Chinese, because the Chinese aren't coming to the table, are not coming to the negotiation table for the trade deal. And so that sent the market running for the hills. And so it dropped down to support, bounced up. Next day, looked like it was going to recover, but bam, starts to shoot down. What has happened over the last couple of days here, and I'll just blow this up really well. What's happened over this week? What I thought was going to happen is that price action would come down, bounce off of a level, and then rebound back to the top side. And it has, in fact, done that. Take this out just a little bit, because there's something very important that has taken place here. Yeah, I may have to expand this. We will. There we go. I still want to capture this. Markets tend to move in symmetry. And we can count on symmetry up into the place where when symmetry is broken, it typically means a market is going to go into either a significant change of direction. In other words, the trend is changing, but it's something we should be paying attention to. So I watched this pullback that was over here. I watched this pullback that took place here from early April to here. There was a little bit of a zigzag in the middle of that. There was a move up. That move up was here. And so what tends to happen is once this little ledge here proved itself, we measured from the lows here back up and compared it to this last piece of symmetry here, this last little rally attempt. And what does it reveal? Expand that. There we go. Normally, the rally attempt, or when you're looking at symmetry like this, is going to stay within the anywhere from 786 to 127.2 extension on the Fibonacci's. And once again, the Fibonacci's work out exceptionally well, showing that prices stayed right within that. A convergence of clues, if you will, was basically telling us that, well, yeah, also look what's there. We've got the 8-day. We've got the 50-day moving average, the 20-day moving average right above it. So it's telling us, saying, hey, it's basically whispering to us, saying, this could be a really strong level of resistance. Now, does that mean we're not going to blow on through and head for the sky? No, it doesn't mean that that's not going to happen. But we want to be aware of what is going on. The other thing I wanted to show you is basically this pullback right here, which took about 1, 2, 3, 4 plus weeks. Here we basically, and that's another thing that symmetry tends to run in. It will run in similar number of days. In other words, we would expect this move down to last 4 plus weeks, about 4 weeks. It can move faster than that, but we would anticipate in the 4th week or the 5th week, that's maybe when we would, from a symmetry standpoint, get a bounce. So here's what's happening is this number here was very similar to this number here. I think this came out to the 782 or 786 retracement of this move. And so that's where we say that's a logical place where you'd expect a bounce. This is what happened with the spiders. Here's what happens to the Qs. Excuse me. Okay, I basically drew a similar process up here with the Qs. That reflects, here's the rally attempt last time. Here's the rally attempt this time. Rally right back up into the moving averages, which was what we expected to happen. And now it is having a hard time pushing back above this level. So for us, do we want to take actions to perhaps draw in some revenue from doing that kind of a move? The answer is, yeah, we possibly could. And I'll show you a real quick options trade that you may want to look at and do. If you're trading today, if you know how to trade options, this would be an opportunity for you. I'll come back to this. These zones that I've identified here, this zone here and this zone here, that was the 786 and 100% retracement from this move over here. So again, price action fell right down into it, found support. Now, if you didn't know how to use Fibonacci's, you wouldn't have seen that. You wouldn't be able to say, oh, this is what happened. And so that's part of what we help our premium active trend traders understand how to utilize. Or they can just, basically do shadow trades with us is another good way to take advantage of this. So that's what's going on with the Qs. represents the NASDAQ below the 50-day moving average. As long as prices stay below the 50-day moving average, then we can anticipate prices moving right back down. The fun part now is if the high from yesterday is a solid high, how far can we expect prices to fall from here? That's always a question that people ask me. And what I utilize to find that is I just use a little Fibonacci extension, and I go back up here to the high. Come back a little bit. Oh, Dennis Wilborn, excuse me. Okay, I'm going to come up here. I'm going to grab this high here, and I'm going to go. I'm going to grab that high there. Didn't take. Come on. Oh, okay, let's go here. Let me make sure I'm looking at the right thing. Fibonacci extension. There we go. Everything kicked in that time. So I want to go to this high here. This was a swing high, which is there. I go down to this swing low here. There. I go back up to this potential. This could be a strong swing high. And if it is, where can I expect prices on the Qs to go over the next couple of weeks? If it drops to the extension of 786 on the fibs, it takes us down to 175.41. If it gets a 100% extension, 171.91. If it drops, the last target would be the 1272. And that's the downside target. Isn't it interesting that this past low here back in June basically comes out just a little bit below the 100. And so that's how I utilize this to be able to say, okay, wow. As you saw from what I looked at over here, how it projected out the downside, we know that the Qs work really, really well with these projections, these extensions. And so anyway, so hopefully you've recorded all that. Who wants to take a look at a potential option trade? Does anybody want to look at a potential option trade that we may want to do? Okay, well, Steve does. Anybody else? And again, this is not a recommendation. This is just this is one way to take a look at this. Well, let's pull up the Thinkorswim platform. Let's go over here to Trade, POW. And I'll pull this over. I'm going to switch this up to the Qs. Now, Qs have weekly options. If you don't know what that is, that's okay. But this is the kind of thing that I'd be looking at. I'd be looking at going into next week, which next week ends on the 16th of August. And I'm going to do a real quick. And I think that the Qs are going to continue to fall. So I take a real quick look back here at the chart, and what's kind of my parameters. My parameters is I'm staying below the 50. Looks like I may break down below the 8-day moving average. And so if this doesn't go my direction, I want to be closing this position if I get back up above 189. You can jot that down to yourself. So let's see what we can do. I do not, and this would be good for somebody with a, like a small trading account, or you're just, and you're trying to grow it. And I just want to pick up a little bit of cash to start growing that account. So I'm going to go look at a credit spread. I'm going to go here. I'm sitting at 186.65. I think it's going to drop further. I'll go down here to my about 180. Yeah, I'm going to go here. The 1 86.65. Now I'm going to go to the 187 number. And so I'm going to basically be selling this, but I want to protect myself so I don't have a max potential loss. So I'm going to sell the 187s. Get out of there. So I'm going to go click here, and I'm just going to do a little bit of a, this is like the vertical spread is a little bit like a covered call. You may be familiar with that. And so right now it's telling me that I can sell 10, and I'll click this up to only sell 1 initially. So I can get, for 50-cent spread, I can get 28 cents. That's what it's telling me. Well, I'm going to expand this. I'm going to say, hey, I'm willing to risk $1.50, or I'm willing to risk 75 cents. So in this particular spread, I'm willing, my max loss would be $73. My max profit 77. Edit. So I'm given the size of my account and what I want to pick up, let's say $300 worth of premium going into next week. Well, here I'm risking 216 to make 234. Pop that up one more time. Okay, now 312. I'm risking 288 to make 312. Now for a weekend's worth of work, that or through next Friday, not bad. Again, my stop loss is going to be if I go above 189. So I'm going to just say, that is a pretty good risk reward. It's better than 1-to-1. And I'm going to go ahead and it will expire next Friday. So bam, I'm going to send it. And then we'll see if it gets filled. I'm not going to hang around long enough to see if it does get filled. I could go in and just play with it really quick and say, and since I may do that, I'm going to go ahead and just play with it really quick. There's my that. And I never chase, but I may move it a couple of cents. I moved it down 2 cents and pow, it got filled. And so what is my risk reward now? For that trade, my risk is I'm risking $296 to make 304. So if you had a challenge keeping up with that, that's okay. You can watch the recording. So that's a couple of other ways you could be doing this kind of trade. You could be looking at trading the inverse ETF, which goes down up while the market goes down. That's a couple of other ways we do it. And that's what we offer with our, with what we do with active trend trading. I've been going for too long, guys. I'm going to go over here and go back to the slides and just whip through the rest of those. Some of our strategic compounding strategies we do where this is a small account type of trading. So far this year, we've taken $10,000 and it is now up to $29,000. Next week, our 5% target, I'm trying to generate 5% per week, is a little bit over $1,400. I'm also doing our weekly earnings spread for our earnings trades for the quarter. Right now, had a great quarter last year. We did about a little bit over $4,000. This quarter, with the market just going nuts, we have not done the same level of success, but we keep plugging on this because we know it's the earnings are great places to catch the volatility of things moving up. We also want to strategy one. Strategy one is what I do is just we're buying either stocks and or ETFs. And it's a really great starting strategy for people who want to learn how to trade a system. Normally we are flat this, but we usually get multiple trades per week. What do I send to folks? Is I send them a little table like this that shows exactly what we're trading, where we're going to enter, when we're going to exit, both stop losses and profit losses. There's a couple of trades that we did over the last few weeks, LABU, Twillo, and the profits that we put on top of those. And Boeing, don't forget Boeing. We had a nice trade on Boeing. So hey, I just want to talk to you really quick. We do I'll click this back a little bit. webinar special, I offer a special deal for folks with the active trend trading, and it gives you a 20% discount. Here's all the items we provide a $1,500 a month value. You can pick it up for $299 if you do it for the quarter. I'm not a big hype guy, so I'll move on. NASDAQ, I'm not going to talk about right now because we are in August. We would anticipate towards the end of August, start getting a rally in NASDAQ. Same thing for the Russell. Towards the end of August, a rally. And that basically is it. If you're looking for other presentations that we do, the Bay Area Moneymakers, I do a webinar with them. Had a wonderful time presenting to the Honolulu IBD meeting this past week, and it was just so awesome to be back in, back home in Hawaii and talking with fellow traders here. And here is the active trend trading team, myself, and my son Brandon, who's come on back on board. Brandon's a great technician and helped do a lot of the back testing for a lot of the systems that we do utilize. Of course, believe it or not, my wife still looks the same as she does right here. This is back when I was on active duty. And then Brandon, his wife Sharon, and our two great grandkids. So lastly, that basically is it, guys. I hope that you have found today's very interesting. If you're joining, again, I don't know who joined us on YouTube or if anybody did or not, but hey, we want to keep growing the egg, trade wisely, trade profitably. 2019 is turning out into a great year of completion. If you're a premium member, we will follow back on with this. With the meeting at the next final hour, which starts at the top of the hour. Again, I hope you have a great weekend, and God bless everybody. Hey, Pierre, how you doing? If you have any questions, shoot me an email at this email right here, and I'd be glad to chat with you. I always love to talk about stocks. So with that, I'll say aloha. God bless. Have a great one, everybody.